Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It's February 27th. This will be our chart lesson for today, and I'm doing this a little bit early. It's after 2 o'clock, so with the market is not quite closed. It looks like it's going to close, and actually it just did close, so the market is closed. But I'm going to a basketball game tonight, so I'm going to try to do this a little bit earlier and free myself up so I can get out of here on time. Um, Started a little slow today. We had a little bit of a trend down here early, and then we kind of went flat. So you had to be careful right in here. And then it kind of picked up through here um, into the 2 o'clock hour. So not a lot of trades today. This was kind of a odd day, honestly. This was a pretty good trend here, but you really needed to find this secondary. What it is we spiked up here and went into this real tight channel, although that channel was within another channel in my opinion. So that was a little difficult. That was a little different. You don't see that happen very much, but you notice how prices are just swinging. They're just riding up and down that midline right there. But if you drew a trend line here and drug it up, it fits. So it's like a little spike in channel that's inside the bigger channel. So that's a little different. And I drew all these green, but if you found this tighter channel, you probably could make these all blue. If you didn't, they're all going to be green. So um, that's the kind of the deciding factor there. You could argue for these to be blue if you see this little spike in channel right here, but a lot of people aren't going to see that. They're not going to find that. Um, it takes a little more experience to find that kind of stuff. So, but anyway, I'm going to show you a couple of things. Let me back out here and then we'll go through the trades. The first thing I would have done is I would have measured this leg here. Even though that went into yesterday, when we started down here, you're kind of looking for a measured leg. And notice we came up a little bit short. Here was the target I had earlier down here. Um, Actually, I had it right first time. So you would have been looking for a measured leg, but when we came up short here and started reversing and trending up, uh, when you don't reach a target like that, generally that's telling you that something's changed and the market's probably going to go further in the other direction. So once we started working higher, that would have been a good clue to, hey, stay with the new trend going this way because we came up so much short here. Sometimes you'll come in a little late, but it's obvious here we're just trending higher. And this is a real strong trend here. I talk about this often, where you see lots of little bars and stems and dojis, and it just keeps going higher and higher, and you don't get very big corrections. That's a strong trend. It doesn't look like it, but it is a relatively strong trend. So just something to show you that would have been my near-term target when we failed here and reversed. Um, just that's a good sign that we're probably going higher. So I'm surprised we didn't go a little higher than we did, to be honest with you. Notice we eventually got a break, and we're working on a retest as we went into the close there. Let me back out. We'll go through the trades. And again, you had to be a little patient this morning. 7 o'clock came right in here, and we're just really in a tight range, and you can see that. It's tempting to want to go long right there. Notice you got a new low, and you get a first entry. You push through the EMA. That's a perfect reversal. And of course, that's it. What time is that during the day? That was at 7:09. So you could have gone long there, and if you did, um, it's going to be hard to hold through this. So I didn't mark this, but I should have marked it, and it should be. Technically, it's really not a failed second entry short because you tick a little lower right there. But I'd still look at that as all one move, and then you're coming back, and so you've really kind of got three attempts to go lower, and it bounces right off that trend line. It is kind of a reversal pattern, so I'm gonna leave it green. Um, Generally, though, when you push higher and you pull back, and it bounces off that trend line again, I'd be pretty interested in going long. But look, we've turned down once, twice, three times, and you had what looked like a trap right here, and it didn't shoot up and fool anybody. So that's why I drew this arrow, just to remember to talk about that, because sometimes I'll get busy and forget to talk about these things. So that one is really tempting, And if you did go long there, it comes back by one tick, stops you out, and then guess what? It goes exactly where you thought it was going to go. And same thing right here. This one is tempting. You've got a double test, but you just don't have room to get out. Look at how many times prices have turned down right there. That's too risky. So, and notice you got a new low, first entry, second entry. So again, it's a failed second entry short. That might be enough to push it through, but I just don't think you got enough room there, and I'd stay away from that. But notice we made a new low, and you push up first entry, second entry. There's your good failed second entry short and a breakout pullback long, and now you might go long right there. That's the best place to go long, and you've got one leg up, so I would look for a measured leg at a minimum. I think we end up getting a little more than a measured leg. We'll just measure it and see. That would have been my target, and you can see we got a measured leg. Looks like it's either to the tick or we missed it by a tick. We might have missed it by just a tick there. So that would have been a great target. And then now you've had your break, two measured legs up, you get a first entry, second entry, and it fails and turns down. And people ask me this all the time. People get confused. Where does it become a failed second entry? Well, once the second entry is triggered, which was when it went one tick above this bar right here. So once it triggers, if it turns and breaks below any other bar, which this would be the next bar, when it broke below there before it reached a scalper's profit, that's when it became a failure. Now, just because it's a failure doesn't mean it's going to follow through either, but it's a failed second entry long immediately when it broke below that bar. If it had reached a scalper's profit and you were able to scalp out with 4 ticks, then technically it's not really a failed second entry because it still got its met its target, but we still use those because generally when you get a second entry with the trend, prices should keep on going. And when it doesn't, then that's telling you something's changed, and those failures are a good place to enter. But that's what a true failed second entry is when a second entry triggers and then it fails and breaks below the next bar before it reaches a scalper's profit. So that's the legal or the official, I guess. It's not illegal. That would be our official explanation of a failed second entry, whether it be short or long. So I hope that makes. So anyway, you may take this short. It's not a great setup because it's right into the EMA, but that's a big bearish bar. It is a failed second entry, and we are looking for a reversal, and there's previous resistance up here from the overnight, so it's probably a good place to enter. But it's a little aggressive, so I marked it green. Then we run on down and we pull up, and you get a second entry short right here with a big bearish bar, nice bearish bar. Go short right there, and then first entry, and then there's a second. This actually broke higher and turned and went out the other side. I don't think I'd go short way down here. What I'd probably do if I waited on this bar, I'd let it break lower, and then I'd drop a limit order back here at the same place. It would have been one tick below that one, and you would have gotten filled to exactly that tick, and then it turns down again. But the best thing to do here on this one is when it breaks higher and suddenly it looks like it's going to fail, go ahead and put your sell stop right there and anticipate a failed second entry long. And when it fails, boom, look, the bottom falls out. It comes back, gives a second chance, and then off it goes again. And if this would have been a little more bearish without 3 or 4 bars stacked up, I'd probably marked it too. It's right off that key entry point, but it just doesn't look very good. But nice move down. And then we kind of get stuck here. This one is a possible to go long because we've been away from the EMA since just right around 9 o'clock up here, a few minutes after 9, and then it's not that long. It's a pretty quick move down, but it's a long way to go to be away from the EMA. We're overdue, and when it tries to go lower once, twice, and be that far away from the EMA, especially with that little one tick lower. There's a higher low right here, but too bearish, and it's getting too close to the trend line again now. And then of course this is where it really started trending higher again, and that's a relatively bearish bar, and that is a second entry, so that's another possibility. But really, it's just kind of You've got two bars stacked up there, and that one's real bullish. So I'm a little bit leery of that one. Again, you probably could argue for it to be green. So I'll mark it, but again, I think you're better off to wait. But it is a second entry, and that is the first break of that trend channel. It turns out it's a two-tiered channel. And there was a pretty good idea, that gap right there, there was a pretty good idea that, that there was a line there. That's the way those things do, those gaps. It usually means there's some kind of trend or midline or something coming through there. But anyway, you get a second entry short right here. Notice that new low, first entry, you move up, second entry short. It's kind of a up-down bar, even though this one is much more bearish and much bigger than that one. That's telling you something. This would have been the better place to enter, but it's right into all that support. And even in a downtrend, when you're looking for a new low, it's just not a very good idea to go short right there because you'll get burned most of the times. And look what happens. It falls through there and it fails. Try to go lower once, twice, and it's pretty much a repeat here. Not, this is a reversal, more of a reversal here. I would have liked to seen this one push on through and the EMA act as support before it went higher. But still, you can see all that support across there, and we got another double test of it, so you could go long there. And it is the second entry long, too. It's real close to being blue. I went back and forth about it, but I still think it's a little aggressive because this has been a pretty good downtrend and we don't have a measured leg yet. So it could break higher here and then shoot down. I believe another leg pretty close to this leg here would have given the measured leg that we got from over here and started from here and it wouldn't have gone down. So I was a little leery of it. But it runs right back up and then we're just kind of finding some resistance right here. But you can see this trend line, you don't really know it's giving you support until here. So I still like this trade here because you wouldn't have that. If you're looking at that at the far right side, you got a second entry long here, but it's into that resistance. And when it pushes up, you basically got a new high here, first entry, so a second entry, and it quickly turns it. And so if prices break below there, you can treat that like a failed second entry long and a failed breakout to boot. And it's good just enough for a scalp, and then it starts going sideways back in here. And so you can see this trend line's holding, but the resistance is there too. So you're it looks like a little wedge. We finally break through, it pulls back first entry, pulls back second entry, and it actually went lower here, turns and goes right out the other side. I'd have my buy stop right there and on a second entry, but it's a failed second entry short too. So even if you didn't go long with your buy stop right there, when this one ended, you could wait for it to break higher here and drop you a limit order back here. I don't know if that one would have filled or not, but it'd be worth considering. And off it goes. And then you got this is basically another swing low because this is like two legs down. So this is, even though it didn't tick lower here, it's still a new low. So this is a lower low. So you got a new count. So first entry, second entry, it fails. There's a failed second entry there. I did not mark that one simply because we weren't back to the trend line and you didn't have enough information to see this tighter channel yet. So you're just taking a first entry here off a high, and it's in the middle, kind of nowhere. We come off the EMA, so there's a good chance we're headed back here. So I don't like going long there. But it is a trap, and so you might consider it. Again, you could probably argue for it to be green. But when it pushes up and breaks higher and pulls back and makes a higher low, you got a low, a double bottom that's a much higher low, and then a higher low from that. And that's a nice, whenever a bar opens here and trades way down here and then fights all the way back up and closes on its high, there's a lot of buying coming in there. That's a strong bar, so you may consider going long right there. And then you get your trend, this little spiking channel, this trend channel, trend line right here. You get to confirm, look, that's another bullish bar. And this is, you're starting to see those little bars with stems on both sides and dojis, and where the pullbacks are real minor. That's a good place to go long. It takes it a minute, but it works on up. It comes back to the trend line again here, but it closes exactly on the other side, so I was a little leery of it. But even if you'd taken that one, it would have worked. And this is one of those trends where, um, you just about have to enter every little pullback or you're not going to get in. But here's the better one. And this one should have been blue here. Well, I left them green for a reason, but you could argue for several of these to be blue. But this one could be blue for sure if you found this trend line. Notice it makes a new high, pull back first entry, pull back second entry long, right off the EMA and the spiking channel trend line. And look at it. People were real confident by this time. Look at it go. And then, of course, it pulls back. First entry, pull back, and it actually went lower, turns and goes up. That's a second entry long. And then you get a failed second entry long, bounces off the EMA trend line. I like going long right there. And then that got you into the 2 o'clock hour. There's a another second entry right here. It's not a very good setup, but it's the second entry and it's right after 2. If you'd taken that, it would have worked too. I didn't mark it because it's after 2 o'clock, but that would have worked too. And that's really just barely into 2 o'clock actually. So, but yeah, again, if you saw this spike in channel, you could argue for these two trades as well to be blue. This one maybe not because the bar is just so big, but you could argue for that one to be blue for sure. So, I mean, there's a double bottom there, first entry, second entry, so it's also a failed second entry short based on the way we do our counts. So, yeah, not the best day ever, but this was a pretty nice trend here, and you can see lots of trades up here. And like I said, a couple of these you could argue to be blue as well. So you just had to be a little patient today. There was something else I wanted to go over with somebody. Question that I had, and I'm trying to remember what it was. I've kind of lost my train of thought here. I'm going to pause it just a second, see if it comes back to me. Here's one thing I did want to go over. I wanted to read an email. I got several emails, very positive, from my little soapbox episode yesterday, and I always feel like I always feel like I don't want to do those, but I always get so much positive feedback from them. I think it really does help people and encourage them. So I like to do them, but for whatever reason, after I do them, I always say, I should have done that. And a couple of times I've done them and then gone back and deleted them and didn't even post them. But after finally, saying, hey, I'm just going to post my true feelings, and, people like it, great. If they don't, that's too bad. I always seem to get a lot of positive feedback from them. So, like I said, I got several emails, lots of comments in the video as well, but I did want to read this. This was one that was interesting. And I don't ask anybody to send me these. I give you my word. I mean, I know to the naysayers that means nothing, but any of you that have followed me for a long time, my word is if I give you my word, you can stand on it. So I give you my word. I don't ask for any of these emails. They just come. I don't ask for any positive comments, I don't ask for comments at all. I'd prefer to, honestly, I'd love to just do away with comments on the videos and block them, but all that does is just make people more suspicious of you. So I just let them go, and I don't pay any attention to the negative ones. And every once in a while I'll respond to them, but for the most part I just ignore them. So, but anyway, I wanted to read this email because this should give some of you some further encouragement that this can be done. So it says, hi Mac, thank you for yesterday's soapbox comments. I enjoy them greatly. Yesterday was actually one of my favorite type of days. And he puts 2 bullet points here. Bullet point 1, price behaved almost perfectly for a range day, failing at both the highs and the lows and giving impulse moves on the failure with good opportunity, which is exactly how I teach it. Identified the context early and just waited patiently for these failures at extremes. You can see my 2 trades at the attached screenshot. I have room for improvement, holding on to the runner on the first trade and not getting stopped too early on the second one. But that's okay. That's what after hour study is for. It was simple, but not easy. I followed my routine and executed my plan with a profitable outcome. Good. And then bullet point 2, keep up the good work and thank you for being so persistent in your message. that this is a skill and it takes a long time and much study after the close to master. But, and he puts this in capital, but it can be learned. And that's what I try to tell people. But there's always some naysayers. There's always those that can't do it and they think nobody else can do it. But he goes on to say, I would have given up on price action trading a long time ago if it wasn't for your soapboxes. I'm glad I didn't. My trading is going well and I'm slowly building my account, making plans on how to increase size responsibly. I hope you are well and that your health is improving. Have a good day, and he puts his name in there. So there's a good example of somebody that's stuck with it and they're making money. He doesn't sound like he's burning it up yet, but if you're profitable at all in this, it's just a matter of time to where you can build on that. And he sees that. And, this is not easy. Like I said yesterday, you got to stay with it. And it's not, and I don't mean stay with it for a year or two. I had somebody post on there, it took them 8 years, but they finally got it. So there's just so much to, it's not only do you have to learn the proper, how price action reacts and how prices print to a chart, but you have to get through the emotional aspect of it too, as I talked about yesterday. So just keep that in mind. But there was one other thing that I really wanted to talk about, and I can't remember what it was, but let me pause this and see if I can find that email on that question just to refresh my memory. Okay, I remember what it was now. Somebody asked me, he said, how should I handle if I'm trading and I take my first trade and it's a loser and I use a 2-point stop, then I lost 2 points. But then it takes 2 winners to catch up. Well, that's true. And you got to keep that in mind. If you're not trading runners, that changes things consistently. But if you're trading, especially on trends like this and trying to catch runners, the runners change the math. They really change the math. But if you're not trading runners and you're only scalping singles, then you may only break even. But let me tell you, if you can break even trading singles, then you're on the right track, because that means you're getting a whole lot more winners than you are losers, because it takes 2 winners if you're only scalping out 4 ticks versus 1 loser. So that math doesn't work very well at all. And that's why you got to get 80 to 90% wins, which can be done. People think that can't be done, but that's not that hard when you're only scalping 4 ticks once you get this. So, but the point I'm trying to make is you got to get towards runners at some point to really start to improve your math. But because of the emotional part, it's probably okay just to start with singles and just scalp out singles. And if you break even or you lose a little bit of money because of commissions or whatever, you're still doing pretty good. That means you're winning much more than you're losing. And so just keep that in mind. If you're not making money and you're only scalping singles, if you're not really losing any money, especially if you're not losing any more than your commissions, then you're doing pretty good. So you're on the right track. Just keep at it. Keep working towards those runners. And the thing about runners, even if you're going to do like 50-50, say you're only going to trade 2 contracts and scalp out 1 and let 1 run. Well, the math is still not real good there, because if you lose 2 contracts, and if you win, you only win 1 in some cases, and because your runners get stopped out a lot. So your math is still real fuzzy right there. And so I really do not like doing the 50-50. I know I've in the past, early on, that's what I was thinking that would probably be best for people, but I've kind of changed my mind on that. I think you need to be able to trade at least 3 contracts and scalp out 2 and keep 1 runner. I think you're better off to do it that way. If you're, and if you can do 5 and scalp out 4 and keep a runner, the math works better in that instance, because runners don't kill you so bad. I guess is where I'm going with that. But the better your ratio on scalps, scalping out more than you do runners, really helps. And then, if you can trade 10 contracts and you scalp out 8 every time and you keep 2 runners, you only got to catch a runner every now and then to have 2 of them to go 4 or 5 points. Let's just say you catch a runner with 2 contracts and you only go 5 points. Well, that's 10 points that you made on 1 trade. And that makes up for a lot of losers. And that adds a lot of profit if you're not losing very much. So just keep that in mind. So yeah, that trader, that's a good question. And I get that question a lot. I haven't heard it lately, so I thought, hey, this is probably a good time to talk about that too. So um, just keep that in mind. And I haven't updated people except maybe privately in emails, people asking. Um, but I'm still not trading, but the doctor wants me to keep my time at the screen to less than 2 hours a day, and I'm spending probably 45 minutes to an hour, answering emails and just doing basic stuff that I have to do every day. So that only leaves me about an hour for trading. So I'm trading about an hour. I fudged it a little bit, trade for an hour, hour and a half, and then I spend another hour reading emails and stuff. And I seem to be doing okay. My eyesight's still getting better. But I start to get headaches if I look at the screen too much. And like I said, the doctors encouraged me not to spend more than about 2 hours a day looking at this computer screen for now. And I go back again in about 3 months, and he said that, if everything still looks good then, and I'm up to it, he'd probably release me and just let me back to normal kind of everyday thing. So, but yeah, I appreciate everybody asking about my eyes and how I'm doing, and I really am doing well. My eyes getting better, my eyesight gets better every day. Um, I feel, used to after about an hour at the screen, or even 30 minutes, I was just wore out and my head pounding and everything else, but I was really straining to see well, and I'm not having that now, so I'm much better. But anyway, thanks again for y'all, those of you that ask, and, continue to keep me in your prayers, and I appreciate it. And I'm going to wrap it up, though. I've talked to another 30-minute video here, and not much more we can talk about today, and I think I've covered everything I wanted to cover as far as just some housekeeping kind of things. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week, but I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.